we just kind of started saying, man, we've got to look outside the Middle Tennessee area, and what's our criteria? How far will we go? Pensacola's got 3 universities. It's got a major interstate running through it. It's got a lot of commerce going on. That was one thing that impressed me.
This episode brought to you by Suites at Madison. Meeting and conference rooms for rent by the hour, week, month, or year. Suites at Madison, where business gets done. Check them out at www.downtowntampaoffice.com. Now, on to the show.
You are listening to the Invest Florida Real Estate Show, covering topics in lending, buy and sell strategies, property management, hot markets, and tips and tools to guide you along the way on your path to real estate success. You want Florida investment real estate talk? You have come to the right place. And now, our hosts, Eric Odom and Steven Silverman.
Hello and welcome to another episode of the Invest Florida Real Estate Show. This is your co-host, Eric Odom, along with Steven Silverman. Steven, I've had to listen to you whine all week. You got all kinds of problems this week.
Well, it wasn't all week, but it was yesterday because we were in due diligence on a property that we brokered. And, you know, our responsibility is to try and make sure that it goes through. And just at the end, the buyer terminated with the caveat that they would accept it if their price was dropped by about 30%, and so retrading. And, you know, as a broker, but also as a seller, you want to be sure that your contract's going to go through. So it's really very important to vet the buyers. We try to do that in this case, because they seemed like they were users, but at the end of the day, they wanted to try and redevelop it and get a better price.
You could have nipped that in the bud from the outset, yeah.
Yeah, well, if we'd known what they wanted to do, but that was not how they presented it, and it just wastes a lot of time and money and effort.
Yeah, you got to put on your big boy pants, though. That's the nature of the beast. But
I did that already. Could you pass the Kleenex again, please?
You know, it's something that I don't understand because I've never seen that a successful tactic. Retrading. In other words, you come in with a price of X and then you go back to Y. Now, there have been legitimate instances where during an inspection that you found something that's catastrophic that you wouldn't have seen through a drive-through, like foundation weakening, sinkhole types of issues. And buyer and seller tend to understand that. But I mean, I had a case fairly recently here where, you know, I had a 10-year-old building. It was still in pretty good shape, but the seller who owned in the complex, it was a condo, knew what a 10-year-old building looks like. And there was nothing extraordinary about the condition of the property. It was in decent shape, a 10-year-old building. It had a 10-year-old air conditioner. You know, the floors had been replaced one time about 3 to 4 years earlier. But I think if you walked in, it wasn't brand new, but it was not in bad shape. But we went to contract, and as soon as the inspection came back, the buyer said, "Oh, well, you know, blah, blah," and wanted to drop the price by, 15%. The seller said not only no, but tell that buyer to never contact me again, because it just rubs people the wrong way. If you come up with nonsense and try to retrade a property, everybody looks bad. And the buyer who's continues to call back and say, well, maybe I'll do it. They don't trust them anymore. There was no legitimate reason, and they tried to retrade it on them after they wasted everybody's time. And the seller in this particular instance, this is chump change of their portfolio. It's such a small piece of their investment puzzle. They don't want to be wasting time with people that are not serious. And so, you know, it's poison the well, and that's it. I mean, that happens. And I guess somebody's uses that tactic, and it's with some success.
Well, it's such a stressful process, the whole contract, due diligence, all that, sometimes the sellers just get worn out and want to be done with it.
Sometimes they do. It's not really been a tactic that I've seen work particularly well. Usually just blows up. And it just aggravates the seller, and you get a situation on the extreme like my seller who just said, you know what? I don't want to hear from that guy again. He's not serious. We're going to get into this process, and he's going to try to do something else down the road. as we get further committed to this. So no, I'm not interested in that seller anymore. So that I see that happen more often than not. Stephen, wanted to just recognize one of our listeners. Really appreciate when you guys come on and give reviews. Want to give a shout out to somebody who left a review on iTunes. Says Specific Florida Insights. That's their name, the name they have on the iTunes store. They say, as a real estate investor in Florida, I really appreciate all this show brings to the table. Thank you guys. Hey, we really appreciate you. And in return, you help us, Specific Florida Insights, by acquiring new guests by filling out these reviews and telling people what you think about us. Because in that potential guests do come on our show. They look to see what our listeners are saying about us. And they're trying to determine, like everybody, where there's a good investment of their time. And we're continuing to have success bringing folks on, and in part because y'all go on there and talk very highly of us. And Steve and I are very appreciative of that. And if you haven't done so, we really would appreciate you going on there and giving us a review, because it does help us with the show, and in turn it helps you too. Stephen?
Well, I'm ready to move a little bit to Northwest Florida and see what's going on there.
Hey, how about that? For our Panhandle listeners, or guys that are on the I-10 corridor, this is your show. We struggle to get guests from that area. It's not inside of our contact database. That many investors up in the Panhandle, the I-10 corridor. So we're happy that we're able to get somebody to come in and talk about Pensacola and a little bit of the Panhandle, and a guy from out of state who does some investing there in Pensacola, Florida. So sit tight. And hope you enjoyed this episode, this multifamily episode, and from an investor who's bought in Pensacola.
Today we have with us David Childers. David is a managing member of Cedar Rock Capital based in Nashville, Tennessee. He has over 15 years of experience in real estate investing in Tennessee. He was 25 years old when he partnered and purchased his first rental property. At 27, he formed another partnership, a 114-unit property in Murfreesboro, Tennessee. David's most recent purchase was in Pensacola, Florida, where he purchased an 86-unit complex. He has a recent partnership with Volunteer Properties, where they manage properties, and David has been advising them and helped them almost double in size. He serves as a managing broker for Millennial Housing Tennessee, which currently holds over 2,500 units from Memphis to Johnson City, Tennessee. Dave, welcome to the Invest Florida Show.
Thanks for having me. I appreciate you setting us up and doing this podcast.
Dave, really appreciate the time that you're spending with us today. Can you give us sort of a 30,000-foot view of how you got into the real estate business, and then specifically how you got into multifamily and why you selected that as an asset class you wanted to be a part of?
Yeah, it kind of happened by accident getting into real estate. I actually moved here to Nashville, Tennessee from Eastern North Carolina, like a lot of others, chasing a dream in music or music business. And I was out on the road, tour managing a band for a couple years. And through doing that, I met a gentleman who out in Northern California who is a successful real estate investor and business owner. And he just happened to mention to me, if you ever want to invest in real estate back in Nashville, I'd love to, at that time, lend me hard money and do flip deals with me. And so I kind of took him up on the offer a year later and called him and said, hey, I found a flip. A flip house. You want to partner with me? And so we started this relationship. And then I'd say, months after, I found our first duplex here in Nashville. And I was actually just trying to wholesale to this gentleman and, have him buy it from me and make a wholesale fee. And instead he said, well, why don't we buy it together and you can manage it. I'll put the down payment and we'll partner up on it. And so I was, young and inexperienced. And I thought, well, that's a great idea. So he and I did that. I was, like I said, and I think that the bio on me, I was 25 years old. I'm a college dropout. So I bought that first duplex and it's just kind of snowballed since then. He and I went on to continue our business relationship. And at this time, we have a couple hundred doors we still own together. And that was about 15 years ago. Spoke to him this morning. We're still good friends and business partners. So that's kind of how I got into it. Honestly, I didn't ever want to be a landlord. I never wanted to own anything, but you kind of fall into things. I fell into owning some flip houses that became rentals in the downturn. And here I am, 15 years later with a sizable portfolio and kind of the leading expert here in the Middle Tennessee area on multifamily investing. And, again, just kind of fell into it. Was really wanting to do full-time flip housing, but ended up falling into the multifamily game and learning it.
Yeah. So tell us how a guy from Middle Tennessee ends up buying multifamily in Pensacola, Florida.
Yeah, I get this question a lot, either when I'm speaking or on a podcast or through my brokerage firm, is, how did you buy in Pensacola, Florida? The Nashville market has gotten extremely hot, and it's been hot for years. I know everybody's probably like, oh, my area is hot too. And so we just kind of started saying, man, we've got to look outside the Middle Tennessee area, and what's our criteria? How far will we go? I learned a lot during the collapse. I saw a lot of California investors here investing in Middle Tennessee that were just being taken advantage of by property managers, and they just couldn't be hands-on with their property because of the distance. So I knew I didn't want to go too far away from Nashville. So that's why Pensacola was still in that parameter or the distance that I wanted to travel. It's a day's drive from Nashville. So if I had to be down there. But honestly, people ask me, how do you find deals in this market? And I got a postcard in the mail from a Marcus agent out of Birmingham, and called him, and just how he started describing the property, really interested me. So the next day, my business partner on that property, we hopped in his private plane and flew down there and saw the property. And, I've learned to love Pensacola. It's a great market. It has a lot of the same feel as Nashville. I always tell people,
what?
Not a
what?
I don't think they sing as well in Pensacola.
Well, so Destin, that 30A area, they call it Brentwood too. Nashville has a nice suburb called Brentwood, and a lot of people, that's their second home. A lot of these country music artists travel down there, Navarre Beach, that whole area. The Floribama, I'll throw that out there, and Orange Beach, Alabama. So there's a lot of Tennesseans that spend a lot of time down there in Pensacola. But Pensacola's got that, I think we talked about it before we started recording. It's got that lower Alabama feel. It's not the Florida that I think most people think about. And Florida, Pensacola's got 3 universities. It's got a major interstate running through it. It's got a lot of commerce going on. That was one thing that impressed me.
Mm. And do you find Pensacola growing? I mean, did you find you were able to get much better values?
Well, I've increased the rents on that property by over $200 a unit in 2 years.
Oh, wow.
So if that should tell you anything, and I just got my report from the property management company yesterday, 2 days ago, and we're 100% occupied. So it's probably time for another rent increase down there.
Yeah, so many things to ask you. For example, you're managing your own stuff in Tennessee, right?
Well, yeah. About a year ago, I had a young lady who was managing her family portfolio approach me and say, I really want to start doing it third party. I need a broker to come under. I need a broker to advise me. And we have a brokerage firm here in Nashville that sells anything from 2 to 50, 60 units. I've kind of found a niche that a lot of people don't kind of understand. I tell people I'm a hybrid between a residential agent and a commercial agent. Okay. So we've done about 400 transactions since 2011 with that size property. Okay. And so I do a lot of speaking. And so this young lady came under me, and we've gone from her managing about 1,000 unit portfolio up to, but we're at about 2,500 units now managing.
So how did you select, and obviously you're having some success with your property manager in Pensacola. How did you select that manager? How did you go about it? And
that was key. Honestly, using the broker that had that deal, I really relied on him to give me a few names and numbers of some people. And I went with Province Real Estate in Atlanta. Okay. And one of the reasons I went with them is they had a 2,000 unit portfolio over in Mobile that they were managing. Okay. So to give people perspective, Mobile to Pensacola is about a 40-minute drive. And again, back to kind of having that local presence. The previous property management company that had been managing Hilburn, they only had that one asset in Pensacola, and they were based out of Atlanta as well. They did not want to continue the relationship. Yeah. They were just pulling out of the market.
Who's showing the property when you have vacancies?
We have a manager. We have that property is staffed with one manager and one maintenance guy, full-time employees.
Okay.
So the area, the general, the area manager, was based in Mobile, so she would come over, twice a month to check on the manager and everything. And now we've got so much technology. I think, that with technology, it's easier to manage a property from afar.
So when you're looking at a multifamily investment, what are you looking for?
Obviously, on that that property, we were looking for a value add play, and that could come in to effect with either a rent increase or just cutting the fat on some of the expenses. And we were able to achieve both on that property. I purchased that property from the original owners that had built it in late 70s, 1978.
Wow.
And so what I liked about that, again, conversation with broker, few things popped into my head. It wasn't somebody who had bought that property 5 years ago, put lipstick and Band-Aids on everything and was going to remarket it, right? This family, their intentions were to build and hold that property for 30, 40 years they held it.
Sure.
They were fixing things, hopefully correctly, with the mindset, we don't want to do that again in 2 years and make that same repair. But again, from the brokerage side, I knew a lot of mom and pop operations like that had been in families for a long time. They don't push rents. They don't really look a lot at how they can trim the fat and make it more lean. And so those were things that were popping out from just having a 10-minute conversation with the broker about this particular property.
Did you have to do a lot of improvements to the units, or were they in pretty good shape?
I think the most we've spent on one unit's about $5,000 to $7,000. They were a little bit hodgepodge of different paints and different, finishes, and we've been working hard to get them all the same paint color, all the same doors. I mean, even 6-panel doors to flat doors and slabs, and trying to get some consistency. Again, I think that's kind of things that you're going to find in mom and pop operations is, they're the cost savings. They're always trying to save another nickel or dime. And so that's something we've done. Another thing on that property that maybe scared some people off is it had aluminum wiring.
Yeah.
So we've been going through doing the proper fix on it, and we should be done with it very, very soon. And the whole property will be remedied.
Can you talk a little bit about cap rates that you've been seeing in the market over there?
Well, I wish they were not as low as they are, because I can't really, find another property that, I would want to buy down there right now. I mean, we've been searching to kind of add to that portfolio and build, a little portfolio down there. But, prices in Pensacola have gotten pretty high. And I would say, you're probably in that low 7 cap rate, or maybe even lower than that on deals there. And, it's hard to pencil a deal out at that kind of cap rate.
And is there a lot of new product coming on stream?
There is some new product coming on, but I wouldn't say in the sub-market that I'm in. A lot of it's happening downtown Pensacola. If you haven't been to Pensacola, you got to go and spend. They've got an old historic downtown that's got, great restaurants, cobblestone type roads, bars. I mean, it's really that's why I say it's very much like Nashville. We've got Broadway Street Broadway that's 5 or 6 streets long, blocks long, and bars up and down it. A lot of entertainment. And Pensacola has something very, very similar. And so a lot of the new product is maybe popping up in those areas, not particularly in my submarket.
So talk to us a little bit about, so you found the property. It was brought to you by a broker out of Birmingham, and you have a partner that you went in on this property with. Did you finance this property, or did you do it with cash?
Yeah, we actually syndicated it, and we brought in, I think there's 6 or 8 partners on it,
okay.
And we did a Freddie Mac SBL loan.
Okay.
A great product, and we work closely with Pinnacle Bank here in Nashville. They merged with a bank out of Memphis, Tennessee, and really rolled out when Freddie Mac decided to do this SBL program, rolled it out about 3 years ago. Pinnacle is one of the seller servicers of that loan. So it's kind of a pretty great relationship we have with somebody local, but that does loans nationwide.
Okay. Now, you told us when you got started, you're 2 years in to this ownership and that you've learned a lot. So let's assume that you find some deals in Pensacola. I know it's a tough road right now to try to find deals, but let's assume you do. And what would be some of the issues that maybe some mistakes that you might have made buying in Florida market that you would know better the next time? But well, say Florida market, that's really a bit of a misnomer. It's really the Pensacola markets. We're talking about Pensacola. It's completely different from Tampa or Jacksonville or Miami.
Right.
Yeah.
Right. Insurance. We don't like named storms. I bought that property, and I think, over the years, the insurance premiums had kind of been on the low end. And now since I've purchased it, we've had, a tropical storm this year, a hurricane, had same thing last year, had, I think, 3 storms or 3 hurricanes that hit Florida. And then this year, so on the wind portion of my insurance, it's gone up quite a bit. And so that would be one thing that I'd definitely put a little buffer of some sort in there to know that, you really have no control over that. The aluminum wiring, from what I've been told in other markets, it would have cost about $500 a unit to make that repair, and it's costing us around $1,500 a door.
Wow.
So that was quite a substantial difference. And I don't know if it's because of Florida electrical contracting laws or what, but I had about 5 or 6 different bids on that project, and the one company we went with is supposedly the leader in doing this type of repair. And so that was something that has no reference to Florida, but they had a master cable contract on the whole property. It was around $35,000 a year that they were paying for everybody to have basic cable to one television. And I eliminated that. And I think I had 10 move outs in 1 month because I got rid of the basic cable program. So, glad I did it, but I probably didn't know it was going to have that great of an impact on people, moving out because I eliminated basic cable. So.
Yeah, money, food, that's fine, but take my TV and we're gone.
Yeah.
Well, my argument this is like us providing basic telephone service, right, into their apartment. Like, nobody wants. I mean, I don't know anybody that would want basic cable without internet, without deluxe channels, and only in one room. And so I just said, we're going to eliminate it. And, we had a service contract that we had to give an explanation or a time frame to get rid of it. And then it was part of the lease. So we actually ended up paying for people's cable until their lease expired, to make sure that we were doing what we said we were going to do.
And Dave, what are you getting for rent, and how would that compare to the average in Pensacola area?
Oh, let's see. We are at, let me pull up the report, but we're at $845 for a 2-bedroom. And it's a little bit higher. And that's, I think, something that's kind of confused my staff down there, because they're scratching their heads going, we're getting 90 cents a square foot, and the market, on our comps is, in the 70s or 80s. Why are we getting so much? And so I think that's where you have to, as an investor, kind of look deeper. And I kept telling them, I said, drive by some of these properties that are, you're using as comps, because I think there's more to it than a picture off of, LoopNet than CoStarApartments.com. You really got to get a feel. And that's what they said. They said everybody that has come through our doors has said, on paper, it doesn't look like a great price, but once we drive the properties, how we keep the exterior clean, is the difference between us and another property.
So that's an interesting point. How many people save money on just the attractiveness of the property, and you're saying that you really get back a lot more than what you put in.
Yeah, and I'd say, if you Google it's not they're duplexes. It's 86 duplex units. It's what's that, 43
Individual roofs,
duplexes on, so they're not fancy. I mean, they're block, but, I've always told my staffs that, we can be clean and neat, and we don't have to be fancy. And I think people appreciate that. Class C is a Class C property. It's don't try to act like it's a Class A property. Our amenities package, I mean, we don't have a swimming pool. We don't have anything really to offer for amenities. But we're still beating out the competition just because I think, the appearance of the property and how clean it is.
Mm. Talk to us a little bit about that Freddie Mac deal and how that worked with the syndication. Were you having to, did the other investors have to give any kind of guarantees, or talk to us a little bit about that Freddie Mac program?
No, I mean, the SBL, so I've actually done a HUD loan on a property, which took me almost 2 years to secure that loan. And I told myself,
good deals once you get them rolling, but they're hard to get rolling.
Yeah, and knowing what I know now, 6 or 8 years later, the control that HUD has over your property and your money, and I tell people that's the reason they can make the loans non-recourse, because there's money in reserves, there's money here, there's money that I cannot touch, and repairs that I have to do. So that's what makes HUD a great deal. But it's very, very painful process to go through it. And then even once you're in it, they can they don't officially. So please, if you're listening and you're from HUD, they change the rules on you throughout the process. And they have clauses that allow them to do that in the fine print. But the Freddie Mac, I believe that one is a 10-year fixed rate, and then there's a 10-year floating period where the interest rate can change, and there's ceilings and floors that protect you. Non-recourse, 30-year amortization. So it's a 20-year loan on a 30-year amortization.
Sure.
And I believe we were in the 4.25%, 4.5% interest rate on something like that. Your net worth has to equal or exceed the loan amount. So, whatever the loan amount is for that size property and that market. So I think Freddie has 4 different market sizes. So New York, LA would be the largest, and Pensacola, I think, is in the smallest one. So large markets, you might only have to bring 20%. Smaller markets, it's 30%.
Gotcha.
And they're non-recourse debt. And that's what I always preach about multifamily is, if you're going to buy a strip mall or a shopping center, from my understanding, bank loans and certain debts are the only possibility, but it's always going to be recourse. So
how would you advise somebody who's out getting ready to purchase a multifamily property in terms of financing? Did I understand correctly that you go in at the beginning and you go in with cash and then finance out afterwards, or do you?
No, the Freddie Mac, I guess that's what I should say. The Freddie Mac is pretty streamlined. If you've done it before, you can get it done in 60 to 90 days. Versus I've never heard of people buying a property with a HUD loan just because it takes way too long. But that property we purchased from the initial with the Freddie Mac SBL loan. So as long as you've got 60 or 90 days and the seller is willing to give you that to get it closed, that's how we did it.
Yeah, I was going to ask you on the contract, what kind of contingencies did you have in the contract? How was it structured? Was it your own contract, or did you use like a standard Florida real estate contract? And then what was the due diligence period? What were some of the specs on the contract because the way it seems to be working now, at least in Tampa, if you walk in with any kind of contingencies, any kind of, if it's not a quick turnaround in the due diligence, the seller just says, go pound salt. Well, there's people lined up behind you. So I'm curious how your deal was structured with this particular seller.
I think we were in front of that. We kind of got into this one, 2.5 years ago, I guess now. And so, they mentioned, putting down hard earnest money day one and all that. I wasn't comfortable with doing that. What we did, and I advise people to do this all the time, is get on the phone with the seller and sell yourself. So, we set up a conference call, and something the broker mentioned, and me being a broker, the seller wants to do this process one time. And so whoever he chooses, he doesn't want to, he wants to get it done with that person. And so I took that as, let's get on the phone. Let's let the seller hear that we're real buyers, and that, the experience we have, and that we're not going to walk over, some, issue that we had previously known about, or even any small, inspection. We did do an inspection, which was, pretty much me walking each unit. And when you get a Freddie loan, they actually send one of their people down, and you have to hire a third party inspector. It's pretty preliminary, surface level. But that one, I think we had a 30-day due diligence period. I think we had 30 additional days to close, so it was a 60 or 90-day close total. And the earnest money wasn't hard day one. But I think there were 10 offers on that property. They narrowed it down to 3 or 4 of us, and that's when we requested the phone call with the seller. And I think that was a huge thing for us.
No, and I'm gonna add to that, because you are a broker and you've been through this experience. You buy a lot of properties, and you understand that there's a certain degree of velvet glove that has to go on with those conversations. Many investors, man, they're the opposite of the velvet and glove. They will say insulting things, not even realizing that they're insulting the seller. And Stephen and I talk about this all the time. Us as brokers, we cringe when the person says, particularly if they don't have the personality that has that velvet glove personality, to talk to the seller, because that's the landmine. The landmine that perhaps could blow everything up, because they say things, they're like, oh my God, what are you doing? But obviously, you've got a lot of experience. And so I just want to put the caveat out there to the folks that are listening. Be gentle about those conversations. Obviously, Dave's sort of those, like, don't try this at home. Dave's an expert. Dave knows how to do this. He understands how to talk to sellers. I don't think, and I know this from experience.
And that's a great thing to bring up, because this property, the gentleman that was in charge of selling it for his family, his father had built this property almost with his own hands, right? So what you're saying, if I would have gone in there and, man, this is a piece of crap property, we're going to fix it all up and fix all your mistakes.
Yeah.
I mean, there was no way. We did the opposite, And
nobody thinks they're that guy until they blow a deal up. And then, of course, they're looking for someone to blame. It wasn't my fault. I mean, I was as nice as I could be to the guy. I don't know why the guy didn't want to deal with it. No, because you're a moron.
Well, we were just on a conference call with the opposite situation, where the buyer requested it and we get the seller on. And I mean, the seller's sitting there. I mean, he's talking so bad about his own property. I think the people on the other end are about to hang up and just say, I don't want to buy this property after what he just told me that he has to deal with on it, and we were just shaking our heads going, oh God, the seller's, going to screw this up for the whole sale.
The knife cuts both ways, doesn't it?
Doesn't.
Yeah.
It does.
So Dave, you raise a really important issue. When there's lots of competition for a property, what puts you over the top? And so you just mentioned forming a relationship with the other party. Are there any other things in what you did that you think might have put your contract to the forefront?
Well, I'd always advise people, it's not always about the price. I mean, we can all, who do we have on the other end buying this property? Are they actually going to get it done, or in 3 months or 6 months or 2 months, are they going to walk away from this we see it on the brokerage side all the time. Somebody offers, they give us the top dollar, they give us, 10% more than asking price. And then on the, 11th hour, 12th hour, the 5 minutes before the contract expires, they're calling us saying, well, we just can't get this deal done. And so, I mean, on the brokerage side right now, the brokers and the sellers are having to be so careful on who they choose. Right.
Yep.
So I think anytime you can show your experience, somebody else, I guess a term I've heard lately is brag book. What have you done? And I think that's what makes it a hard business to get into, is getting that first deal.
Yep.
Getting that broker to talk to you. I'd say even, in the position I am, I still have brokers that kind of question who I am, what have you actually done? And I talk to syndicators all the time and people that, I own 1,200 units. Well, you put 50 grand into a portfolio sale. I don't know if I would actually tell people that you own that deal. You might get away with telling people that originally, but when they start investigating, they're going to call your
BS
bluff on it.
Yep.
So, yeah. So I think being honest, you guys as brokers, me as broker, don't BS me around, and present yourself as, and so I think learning what I've learned from the brokerage, I try to take that in, when I find my own deals and we're buying a deal. Again, what experience do we have? Why should we choose you guys out of Nashville when there's local guys that know the area better in Pensacola? Do you really have financing? Do you know about HUD and, your different financing options? Where is your down payment coming from? Is that secured? So I think trying to disprove that, and getting the broker on your side, once you convince the broker that you're legit, they'll go to bat for you. And try to push you through if they think that you can actually get the deal done, because their commissions,
of course,
the broker's commission
and their time
is based on, can you get a deal done or not?
Yeah. Talk to us about the syndication, because how did you deal with that? Because obviously you're coming in with other people's money, and you're I'm sure you have these people sitting in your pocket. They've told you they want to invest with you, and you've vetted them, and you have some confidence they're going to execute the deal with you. How did you explain it though to the seller that, hey, it's not really my money, it's somebody else's. I'm sort of the deal manager here. How did you explain that to the sellers?
I'm trying to think how we phrase that conversation with him. I mean, I guess our track record of getting deals done before and finding a way, was the key to successfully making them believe, that we would get it done. And I had the confidence that we were able to, a $1.2 million raise is pretty easy. It wasn't like we were trying to, go after $20 or $25 million raise on something like this. But honestly, I tell people, I think raising more money is sometimes easier than, the 1.2, because a lot of the people we approached, I had a few people say, man, I like the deal. I like you. I like what you've done in the past, but 1.2, we would have to fund all of that because it's just, you're asking us for 200,000 and we don't do deals unless we have to put $2 million in.
Sure.
So it was actually a small raise, which I think kind of complicated it a little bit more.
Yep.
So something I learned, doing that process. And being out of state too, I think if you go back to that, something local, go drive by it, go see, you guys preferencing it as, hey, you drive by that area, that's growing, but convincing them that, a property in Pensacola, Florida, 8 hours away is a good deal with them never driving by it or seeing it or knowing the local market. They had to rely on us that much more.
Now, and you're getting your equity investors from Tennessee primarily? I mean, you're in there, rubbing elbows. Rubbing elbows in Tennessee. People know who you are. Yeah.
How long did it take you to do the raise?
45 days.
Okay, so it's 45 days, and then these people were people that you met through your RIA or just being out in the market.
Kind of. I'm very good at knowing the property stuff. But I tell people I'm a redneck and a country boy that understands money. I don't golf. I don't hang out at sailing and airplane clubs. I've been so hands-on with all my properties. I'm a hermit. I keep to myself. So the fundraising side is something that I knew I didn't have that skill and the network. So I actually met a gentleman here in Nashville that he had a mutual fund business where they had built publicly traded mutual funds. And just, again, he was in with the right crowd. He was in the financial planning business for years and has a Harvard MBA. And so we've teamed up and I said, look, you do the raises, you've got the relationship with the guys with the money in the pockets. Let me go find the deals, analyze the deals, asset manage the deals, and we'll put our heads together and do it. And so that's kind of how we did it. So most of the fundraising was actually kind of his responsibility.
Gotcha. Okay. Awesome.
But still, your due diligence period was 30 days and you had your financing really in place after 45 days. So it's a little bit scary going through that.
Well, I mean, the amount of money we needed to raise, if we had to, could have come out of our pockets.
Okay.
So I mean, we didn't want to do it that way. We like giving these opportunities to, other people that, don't want to go find the assets and put them together and find
Sure.
the deals.
Sure.
So giving, those opportunities to guys that, just don't have the time is something, we've done quite a bit.
Okay. All right. Dave, what are you looking for, man? I mean, how can our listeners help you if, you're out there in the market? What are you looking for?
Still, we're still buyers. I get calls every day asking me if I want to sell that property. And I said, no, I want to, continue to buy, even though we know that's hard right now. I think we're moving probably more from the C-class space into a B or B minus space. I think the C-class housing is, the prices have just gotten, crazy, where I don't think the Bs maybe have been inflated as much. So, I'd love for brokers to call me and connect with me. If you're a accredited investor and looking to partner up with me on the next deal, we're looking for anything, that North Florida, Jacksonville, Tallahassee, Pensacola, and all kind of points in between. So I'd love to get on everybody's radar. If you, got listings or you're a seller and want to sell, give me a call.
You don't care. You don't care whether it's Jacksonville or Atlanta or Nashville. It's a good deal. It's a good deal, right?
That's people ask us all the time, like, why Pensacola or why this area? I'm like, because I chase deals. I chase deals that make money. And we're willing to go outside our local, markets to find those deals.
So Dave, how can people contact you?
You can email me, and I can give you my email address. It's Dave, D-A-V-E, at RIA-INC.com. So it's Dave at RIA-inc.com. Or I've done this on every podcast. You're welcome to call me on my personal cell number. It's 615 area code 479-8737. Again, it's 615-479-8737.
Terrific. Dave, any last comments or words of wisdom for investors in the market right now before we let you go?
Be careful. I do a lot of educational stuff. I love teaching people the business, and I'm just, these cap rates, I was trying to coach a guy the other day. I said, look, if you buy this at a 7 cap and cap rates go to 9, I said, on this small deal, I said, you'll be upside down instantaneously $500,000 or $600,000. So, be careful right now with what you're buying. I think a lot, there's a lot of stuff trading that just doesn't make sense. Mm-hmm. I think there's brokers putting packages together with unrealistic expectations, mostly on the expense side.
Yep.
So just be careful.
Terrific. Stephen, anything else before we let Dave go?
No, Dave, thank you very much. And, we look forward to seeing you on the other side of the podcast.
Oh, thank you. I appreciate it. Thanks for having me today. I really appreciate you guys having me.
And that was Dave Childers, managing member of Cedar Rock Capital, based out of Nashville, but investing in Pensacola, Florida. Stephen, what were your thoughts?
Well, we often see deals and there's a lot of competition for deals and then wonder what it takes to put you over the top and get the deal. And what Dave suggested was very pragmatic and just so basic, I think people overlook it. And that is have a meeting, talk to the other party and just form a relationship. You just overcome a lot of obstacles that way.
Yeah. And, I'll say that again. I mean, Dave's sort of put the disclaimer on that. Don't try this at home. This is for professionals. Dave's a professional and he understands how to talk to a seller. Steve and I have been part of many instances where buyer and seller insisted on talking. Before you know it, that thing spins out of control. It's very easy for people to get emotional attached to what's going on and make emotional remarks that end up hurting a deal. So Dave obviously used his experience as leverage to be able to put himself at the front of the line. And there are many people who are capable of doing that. But at the same time, you got to be cautious about it because some people, particularly people that are emotionally get easily bent out of shape, can insult or be insulted and cause a deal to go sideways. But kudos for Dave. He understands how to use the skill that he's gathered, that he's learned over the years, and was successful in acquiring that property and successful in acquiring other properties. He's a very successful guy. Stephen, where can folks hear other Daves, good Daves?
There's a lot of information and knowledge in our archives, so just go to the Invest Florida Show, www.investfloridashow.com, and check out all the information that we've compiled. Also, stay current and listen while you're mobile, on your mobile device, in the gym, or while you're driving.
As always, guys, we appreciate the time that you invest with us each and every episode. And until next time, hasta la vista.
You've just listened to the Invest Florida podcast with Eric Odom and Steven Silverman. Join us every week for actionable real estate investment ideas, and of course, visit our website at www.investfloridashow.com for more shows and tips on how to earn a cash flow in the real estate market in Florida. While hosts and producers of the Invest Florida Show have no reason to doubt the validity of comments of our guests, we do not warranty their accuracy. Please check with your legal, financial, and tax advisors before entering into any investment. Returns will vary from person to person and deal to deal based on unique circumstances. All information expressed in this show is for educational purposes only. Opinions of the guests are not necessarily shared by the hosts and producers of the Invest Florida Show.